Hey guys, it's Tia Moore here with the NextView Home Professionals. If you tuned in earlier for our episode with Trio, thank you so much for sticking around and watching again. I have in studio with me right now Brigitte Echave, and I said it right,
yes.
from the 1031 Exchange Company. So we're going to be talking to Brigitte about everything 1031 exchange, teach you guys a little bit more just in case you're curious about what it is, if you've considered using it, maybe your CPA has mentioned it as an option. We're just going to be talking about what that looks like for you. So Brigitte, thank you for being a guest today.
Thank you for having me. I'm excited.
Good. I'm glad you're
Yes,
excited.
I am.
It was so good calling you up and chatting with you. I know I've been looking to do an episode on this subject for quite a while, so I really, really do appreciate your time.
Well, thanks for asking us to be part of this. I was excited to hear from you. I was just like, oh, yeah, podcast? Okay. My very first podcast?
This is your first
Yes,
one?
it's my first, yes.
So I'm happy because a lot of people have told me this podcast has been their first one to go on. So it's
Nice.
one, it's always nice to, help local businesses and entrepreneurs. And it's also very rewarding to support other women in business. And so I'm really happy you were able to come on.
Me
and
too.
we had a Brigitte, one of my friends, Brigitte, she was on a couple of weeks ago.
Yes.
And then we have another Brigitte coming on in
That's
like
unusual.
2 weeks. We have
That is
three
so,
Brigittes.
Yeah, isn't that? That's
I know.
unusual because Bridget's not very common.
No, it's
as a
not.
name.
And we have 3 coming up. But you spell yours very unique.
Yeah, it's Brigitte. My
Brigitte.
mother's from France, so I was named
Echave.
after Brigitte Bardot.
Oh, so that explains your last name.
Yes.
Ah, got it. Okay,
Yes.
very cool.
Yeah.
Well, tell us a little bit about your background.
So, you go through life and you're like, what do I want to be when I grow up?
Mm-hmm.
I didn't say I wanted to be in title and escrow. That wasn't one of my choices. And I don't think anyone says that. No one in this industry, as far as title and escrow, I don't think grew up going, I want to be in title and escrow. Most
Right.
of us landed in title and escrow by default.
Yeah.
And, we had a parent that worked there, or we had a spouse that worked there, and they're like, come work here. So I just by default ended up at First American Title.
Okay.
And at the time, because a friend of mine needed help with her child who had she had spinal meningitis, the mother did.
Okay.
And so her child was very young and she couldn't handle her child while she had spinal meningitis. So I came to help out. And
Okay.
afterwards they said, what are you going to do now that you're graduated, and have you thought about where you're going to go? I'm like, not really.
Okay.
They're like, well, First American could use some help, so why don't you go work there? So that's where I started.
Wow.
Yeah.
Wow.
Yeah.
And you started out in title and escrow.
Yes, I did plats, subdivision reports and public reports,
Okay.
and platting for people in Pima County.
Okay.
So the builders would bring in their properties. I would open a trust for them, and then I would work with their engineers to do their development
Wow.
plans, and then take them all the way through the public reporting process so they could then offer it for
Wow.
sale to the public.
Wow, that's awesome.
Yeah.
That seems really interesting.
It was interesting.
Do you still have a lot of the contacts you worked with?
Yes, exactly. So it really helped me to catapult myself into the real estate industry.
Got it.
Because you worked with builders, you worked with attorneys, you worked with CPAs, you worked with realtors who
Yeah.
were selling those products.
Yeah.
So yeah, it helped me really, get in there
Yeah.
and get out there.
So you have to be a very patient person for that type of a position, and you have to like reading
Yes.
and researching.
Yes, yeah, and I do. I do
Mm-hmm.
love to research, sometimes anally so. So yeah, it really piqued my interest to do that kind of thing, which kept me in it and invested in it. And plus the people that you deal with is just different. It was a broad spectrum of people. You have the novices who know nothing, and then you have the attorneys that know everything, and
Yeah.
then in between. So and I never got out. That's why I'm still in it.
Now, okay, so what avenue led you to start working in the 1031 exchange arena?
So our boss said, hey, we've got builders who have not only inventory property, but they also have hold properties, and they do 1031 exchanging, and their only option is to use someone out of town.
Got it.
No one in Tucson had a local person doing 1031 exchanges. So we would like you to also, in addition to doing the trust work, do some 1031 exchange work.
Got it.
So that's where I kind of segued into that, and really we didn't publicize it. We just kept it as a, hey, yes, if someone asks especially, then we'll do some 1031 work for them.
Understood.
And then the First American Phoenix operation lost their head.
Okay.
And so then I really segued into doing it full time, and someone took over my position in the trust department. So then I started doing this full time, and it was just like, oh, yes.
Wow.
So that's where it went.
Okay.
Yeah.
Now, is the 1031 exchange company affiliated with First American now?
No.
Okay, I didn't think so.
Nope.
Okay.
Yep. So I started at First American, worked there for 21 years. Then I left there and went to a local title company in Tucson, and I worked there for 14 years, I think it was.
Okay.
And then I decided, gee, it's time for me to spread my wings. My kids are all grown now.
Okay.
They have families of their own.
Yep.
So I said, I'm going to go to the big city. And so I contacted a friend here in Phoenix and decided to open up an exchange company here in Phoenix.
Wow.
Right?
So you guys are partners in the company. Okay.
Yes.
Very good.
So in 2017, I opened the 1031 exchange company.
Wow.
So she's a silent partner.
Okay.
I'm the one who handles the day-to-day operations, and she is helpful in instrumental in sending me clients because she has a big database as well.
There you go.
Yeah.
Now, how has that been for you? Like, what was that experience like? Was it nervous?
Well, yeah, you know how when you try anything new, you're really nervous. I was really nervous to just move.
Because you cared.
Yes, I moved from a small metropolitan area to a large metropolitan area, and
Tucson to Phoenix.
Yes, and starting a new company. Will it be successful? How much will I have follow me?
Yeah.
Because you never know. Are your clients going to follow you?
Yeah.
Are they going to continue to utilize your services? And thankfully, my clients for the last 30 years have all followed.
That's
so it
awesome.
has helped to stabilize my business.
That's
Plus,
awesome.
now I'm bringing on new business because Phoenix is such a big area with lots of investors and and this last year has just mushroomed.
Really?
Because now that prices have started to increase, the downturn in the market in 2007 hit all of the investors really hard.
Yep.
Some had just gotten into the market, which meant they really had no equity and lost a lot of equity. Those who'd been in the market definitely lost a lot of their equity that they were already. So some were underwater, some were even, and so they mostly stayed flat.
Okay.
And so the exchange business really took a toll, I would say, in 2000, and by the time it really hit the exchange business and really flattened out, I'd say about 2011.
Oh, wow.
Yeah, and so, then people didn't do anything, and then the market started to resurge, and I saw the resurgence at about 2015.
Wow. Oh, on the exchange side.
Okay, investors now had some more equity. Now they felt comfortable. Now they were like, okay, we got to move off some stuff and buy some new stuff. And it's just been crazy busy lately.
Wow.
Yeah.
So would you say the majority of your client base is based here in Arizona, or do you get a lot of calls from out of state as well?
Yeah, I get a lot of calls from out of state. You see a lot of New York investors wanting to get out of New York because of their tax issues.
Okay.
You see a lot of people out of California. Again, their
That's
tax
the number
issues.
one. Yep.
They're all migrating out. And even if they're not moving their primaries, they're moving their investments. They're strategizing to, hey, when I do retire, this won't be the place that I'm going to stay. I'm going to eventually sell that primary, and then I will come over here to some of my investment areas.
Yep.
So I see a lot of that. There's been a lot of Seattle growth, so there's a lot of people moving out of that area too.
Yes.
Whether they're moving again, their primary may stay there, but they're moving their assets, their investments out of that area.
They do.
So we are fortunate in
it's a great place
Arizona.
to be. Absolutely.
Because we're getting a lot of migratory business.
We are. That's why we're number one county. Maricopa County is the number one county for home appreciation and growth in the country. So
isn't that amazing?
It is amazing.
It feels like it's a great place to be.
Yeah, it feels the exact opposite of where we were 10 years ago.
Yes.
So thank God.
Yes, very much so. That was a really tough market. That was a really tough crash.
Yes.
I've been in other crashes, but that was definitely the worst that I've experienced. The thing I took away from that was it was horrible, but as horrible as it was, we all survived.
Absolutely. Nobody died.
Nobody died. My children got to see me, because they were just coming up into their 20s. And so they got to see what it was like So they firsthand realize that, hey, there can be really bad crashes.
Yeah.
And we have to prepare and be as prepared. You know, none of us has a crystal ball.
Yeah.
If we did, we'd be billionaires.
Yeah.
So they're well prepared, and they've learned so much through my own travesty of that time that they're better prepared.
Good.
And situated, which I think
something good came from that.
Yeah. It did come from that.
It was a teaching moment.
It was a teaching moment, but they didn't have to have the hurt. You know what I mean?
Yes.
They didn't get that personal hurt of it. Mm-hmm. They only just had to see it through the eyes of all the adults that were around them at the time, because they were coming up into the world. So I feel blessed that they were able to experience it but not be hurt by it.
Well, I'm happy to hear that.
Yeah.
Well, I want to talk about from your perspective, in case people don't know what a 1031 exchange is. Can you explain that to them?
Yes. So what a 1031 exchange is that in an investor's world, when they sell a real estate asset and it has an appreciation, they're happy it has that appreciation, but they go to sell it and they quickly realize that they're going to have a huge taxable event. Often that can be upwards of 30% or more, because they've got depreciation and then they've got the capital gains situation. So they quickly realize that a huge amount of their asset is going to be gone when they have to pay the IRS.
Yep.
So somebody says, hey, have you thought about a 1031 exchange? And that's when they go, huh? And so then they try to educate themselves, and that's what they should do. They should talk to their accountant.
Yes.
They talk to somebody like myself.
Yes.
They talk to their realtor.
Yes.
And they get as much information and become as educated as possible, and then decide, this is something I want to do. Now, there are some people that decide, hey, no, I just want to take my lumps now.
Yeah.
I want to cash out. I want to pay my tax and move on forward.
Yes.
And that's great. I just want everyone to make an educated decision.
And so explain for people that may not know exactly how the 1031 exchange works. So for example, they have this appreciation. It helps them avoid that for...
Yeah.
Can you go into that?
So now when they do an exchange, instead of them getting their proceeds comes to the exchange company and allows them now to go find new property. So it has to be new property to them, somewhere here in the United States, that they're not going to immediately occupy and that they don't currently own.
Correct.
So they've got to buy another asset, and they have only a very short window to buy that asset.
Yes.
One of the things that people believe is that I only have to replace my gain, because if I didn't do an exchange, I paid tax on the gain.
Correct.
Nope. They have to replace their value.
Correct.
So sales price today is basically buy price tomorrow.
Correct.
And they can spread that value out amongst many properties, or they can buy one property, as many as they would like. And so it gives them an opportunity now to take that asset that they have and plunk down, 25% here, 25% here, 25% here, or 100% of their cash and go get a debt for the rest.
Correct.
Whatever they decide is good for their particular portfolio.
Got it.
Yes.
And what about people that... So, and how long can they keep that money in that property?
So, in the exchange, they'll only have 180 days to complete the process. During the first 45 days, they'll have to identify what they want to buy, which is everyone's always downfall. They're always looking at that as, oh, that's such a negative. I say let's take that and make it a positive.
Yeah.
How can we make that a positive? Well,
the 45 days.
Yes.
Or the identification period.
Yes. So how do we turn that around? It doesn't have to be just 45, because if they know at the listing they want to do an exchange, what are they doing? Looking. Yeah. Deciding where in the country they want to replace the asset. Find out what's the marketplace. Then they want to find out what their market is. So they go from a single family residence. Do they want more single family residence, or do they want multi-residence?
Yeah.
So they decide that. They let their realtor know, and that gives them the opportunity while it's listed to solidify what they're looking for. Yeah. Now, it's in escrow. How long do escrows usually last? Anywhere between,
for cash?
Anywhere between, it could be a couple of days, but it could usually
45 days.
Yes, 45 days. So now they got the escrow period.
Yep.
Now, in my opinion, you're out there trying to make a contract. And that's a little harder today because a lot of people don't want contingent offers. But your contingency is based on the fact you already have something in escrow.
Correct.
Okay? So now you're out there looking. Okay, maybe you even contract while yours is in escrow. If you're not contracted while you're in escrow, you've already been looking, so at the beginning of your 45, hit the ground running.
Okay, so I'm going to recap that just to make
Yes.
sure everybody understands that. So you guys, if you let's say you decided you're going to do a 1031 exchange, once those funds are transferred to the intermediary,
Yes.
you have 45 days to identify a property,
Right.
180 days to close.
Correct,
right?
a total. Mhm.
So in that, what Brigitte is saying, instead of feeling like you're under the gun in that 45-day period, while your property that you're selling, while that's in escrow, be focused on looking and possibly do a contingency offer for that property so that you don't have to, start looking for 10 or 15, or however many properties you're looking for,
Right.
and feel under the gun. So it almost gives you an additional 45 days if you do it that way.
Exactly.
Which makes some sense, a lot of sense.
Yeah.
And then, yeah, I like that.
So see, I try to get people to get in that mindset. They're always focused on it's only 45 days. Well, not really. If you drive the boat, you're going to get somewhere a lot better than if you let the boat drive you. And if they can be focused, sometimes people are not focused on their own business. They've got jobs, they've got children. So yes, during this period of time for this exchange, you're going to be focused. A lot of our clients, because they do remain focused, can get in and out of an exchange during that first 45 days.
Yes. Now, okay, I had a situation that happened.
Yes.
So we did exactly that. We went into escrow before the property closed.
Perfect.
So we did that.
Okay.
What happened is the person that was buying that property at the last minute, they backed out.
Right.
And the buyer let me backtrack. The seller for the property that we were exchanging decided he didn't want to wait anymore.
Okay.
And so that was one of our identified properties.
Okay.
And so that was the one who really wanted. We had 3 identified. Out of those 3, all 3 of them sold before we were able to get that one done.
Yes.
That was a tough pill for my
Right.
clients to swallow.
Yes.
So, actually, that's not all the way true. One of them did become available again. So we did end up purchasing that. But that was
A miracle.
that. I'm going to ask you about that later because there's a whole nother story that goes along with that.
Okay.
But what do you do in those situations where everything is now sold?
Okay, so number one, this one cancels. His sale cancels. So now he's like, wow, this person really wants me to buy now, but I haven't sold anything. He could have done a reverse. Where you buy first, sell second. So you could put a reverse in play, buy first, sell second. What does that entail? Well, you got to have the cash to buy the first because you don't have anything sold yet. So you have to have the liquidity to buy that property.
Yeah.
And if you do, that's a great option. So you then buy that property, and then from the time you buy the property, you have 180 days to peddle off what you need to sell.
Oh, okay. Well, that makes sense. So it's still considered a new to you property.
Yes, exactly.
Okay. That makes sense.
So if they do the reverse, that might be an option in the case of this situation.
Got it. Okay.
Yes.
Now, here's another question. What happens if you identify properties in this exchange and one of them happens to be a condo and you forget the unit number?
Yes.
Have you ever had that issue?
Yeah, you experience all kinds of issues for people, unfortunately. So some people wait until midnight of the 45th day, literally, and at night they're cross-eyed and they're writing down the wrong address.
Yeah.
You are tied to buying what you identified during the identification period. If you buy something else, you have to, on your tax return, tell the IRS what you identified, and they ask you, did you buy something you identified?
Got it.
So you're going to have a quandary or an issue when you go to file your taxes because now you've bought something that you technically did not identify.
Got it.
Now it's up to you and your tax consultant to determine what are you going to do.
Okay.
What are you going to do? We don't know,
Interesting. Okay. So something as simple as a unit number has to be on there.
Yes.
Got it. Because otherwise they think you're buying the whole building.
Exactly.
Got it.
That's exactly it.
Okay.
You have to be specific in your identification.
Got it. Now, if let's say you've identified your property, your 45 days is already passed, and for whatever reason the sellers have backed out of that property that you intended to purchase.
Right.
Is there anything you can do within your exchange to prevent that becoming a taxable event?
The only thing that you can do is hopefully you had some backups and you can move to a backup during the, if you're in your 45 days, you can revoke what you identified and identify something else.
Right.
But if you're past your 45 days, you hope that you had a backup. And if not, then you have to look for, all right, what's my alternative here? Your alternative is to take that tax hit.
Darn. And that's the only alternative.
No, there is something else that you can get into. I don't really remember the name of it, but it basically is this: you give your money to someone else, the exchange gives your money to someone else, and that someone else gives you a note, and you receive residual payments over the life of that note. Thereby you haven't received the payments. You're doing a 721 installment sale basis. So then you're reporting to the IRS, yes, I got X amount of cash, I'll have a taxable event to that amount, but this deferred amount is not going to be taxable because of this.
Note.
It's actually a 453 installment. I'm sorry.
Interesting.
Misspoke.
453
installment sale. So you'd report the transaction as a 453 installment sale transaction. Thereby, you only take the tax hit on the principal as you receive the principal of the payment. When you do this type of a transaction, they don't give you any principal payment. They only give you interest. So you're only getting ordinary income tax events.
Oh, okay.
The thing is that you have to find a fund that you feel secure with. Because now you're giving away your money.
Yeah.
And you hope that they have the principal when you're ready to go back to the water.
This is true. That's interesting, though. Oh, I like that in a way.
Yeah.
Because at least it's at least another option.
Yes, it's exactly. It's like your last stop. Oh my gosh, what am I going to do?
Wow. Okay. And it seemed, so with the exchange that I recently did, he sold property in California. So that was going to be a big tax hit.
Yeah.
So are you seeing that? You're seeing that a lot from California, you mentioned earlier.
And so we watch our files very carefully because some people have residual monies. So when they have residual monies, we definitely we look, is it from California? Because if it's from California, we owe California. We as an intermediary and now an agent to California.
Are you kidding?
No, when we take money that's from a sale in California, we become an agent obligated to pay California. Because when you sell in California, they take your money off the top of your sales price. So they don't allow you to go home with your money. They have escrow pull the money right off the top of the sales price. It'll either be calculated on the gain or it'll be just a flat percentage.
Got it.
And so escrow pays it. When you do an exchange, all the money comes to the exchange. And as long as we use all the money to buy new property, no issues to Cali.
Okay.
But if there's any money left, anything over $1,500.
Okay.
So I have less than $1,500 coming to the client, no issue to California. I have more than $1,500 going to the client, issue to California. So I have to take some money and send it to Cali with a report.
Oh, got it.
Then I can give the client the residuals.
Got it. And so the money that you take, so let's say in your total exchange you had $1 million.
Right.
And let's say of that million you spent everything except for $65,000.
Yes.
Of that $65,000, do you send the taxable amount to California, or is it based on that whole amount that you originally had?
You send a percentage of what is getting sent to the client.
Got it. Okay.
$65,000.
Okay.
So yeah.
Wow.
And the client can determine, all right, well, it's cheaper if I just paid them the taxable gain, or you can send the percentage. So the client kind of decides, it's cheaper for me to pay the taxable gain, so I'm going to give you a gain calculation. Otherwise, we just send them the percentage.
Can you tell I actually have this situation?
Yeah, so.
We avoided it.
Right,
We ended up spending all the money.
Oh, thank goodness.
And buying all the properties. But I think the last one closes early next month. But
my most recent one that I sent to Cali was $18,000.
Oh my gosh.
I had to pay. And the gentleman wasn't going to replace. And so, okay, let's say that the money comes here and he goes, fake out. I'm not going to do an exchange, because that's how mine was getting towards the end of the 45. I'm not going to buy anything. And I said, well, you owe on $1.3 million. No, I just owe on what you have. I only have $800 in the exchange. I go, no, you owe on the sales price. So, that's going to be a lot of money.
Yeah.
Do you want to reconsider? So he reconsidered.
There you go.
He bought property, but he ended up with enough money that I had to pay $18,000 to the Cali.
Wow. Well, that's fun. But people don't get that part.
Right. I even had some gentleman say to me, he only owed $4,000 to Cali, and he said, "You don't pay that. That's double taxation." I go, yeah, well,
I think that died.
Double taxation, no taxation. With Cali, we send it. No, you don't, no. I said, well, you filled out a 593 form, and that obligates me to send it to Cali, and I did. And so here's your residual. That's double taxation. I go, you could take that up with Cali. Yeah. I'm obligated. If I don't pay it to Cali, I pay a fine.
Right.
And I think it's like $10,000.
Wow.
And so that's not a fine that we want to pay.
Absolutely not.
Yeah.
Yeah, you have to follow the rules.
Yeah, we just cut it right off. Whether people, in this case, this gentleman wasn't happy about it. And I said, well, I just sent you a check, and I sent them a check. So you can, now they have to turn around and they'll take the documents that I give them showing that I paid Cali and take that to their tax consultant.
Got it.
The other thing with California people that they may or may not realize is that they have to file an informational tax return with California forever.
Yep.
Till they pay Cali back.
Wow.
Yeah. So I don't have any assets in California. I've sold everything in California, but I'm obligated to file an informational tax return with California until I pay them.
Wow.
Yeah.
Only if you've owed them money at that time.
Yeah, only if you deferred a taxable event. If you deferred a taxable event to California, you now have to file an informational tax return with them forever until you cash out and pay Cali. Some people just never cash out. They continue to recycle.
Correct.
So they'll be filing informational tax returns to California forever.
Got it. That makes a lot of sense. Yep. If I was buying from California, I'd be exchanging it somewhere else too.
Right, yes.
So what about, is California the only state where you guys have to do
pretty Yes, we have a spreadsheet. So whenever we deal with people that are selling from other parts of the country, we look at our spreadsheet and go, okay, is this a state that has some issues?
Yeah.
And there aren't very many states that have issues, so the spreadsheet's very short. But we do look just to make sure.
Yeah.
Like I can't do an exchange for someone selling out of Idaho. So if someone is selling a property out of Idaho, I have to have an actual physical presence there.
Oh, wow.
So we won't do an exchange for clients who want to sell out of Idaho.
Understood. Okay.
Yeah.
Now, one of the things I wanted to ask you is some of the more creative ways people use 1031 exchanges, because I'm hearing that it's really popular to purchase your vacation properties with that, or people use it to buy Airbnbs in popular destinations that they like to visit in the U.S.
Yes.
And they'll use their exchange funds to do that.
Yes, and you can buy a home that is used for vacation purposes.
Okay.
However, during the last downturn of the market, the Treasury ran out of money and said to the IRS, you need to figure out why all these 1031 people who own vacation homes are using 1031 exchanges. They've never rented them. Why are they using these? Because it didn't say we couldn't.
Yeah.
So then they came out with a revenue procedure. And the revenue procedure says, okay, vacation homers, you need to rent those properties for at least 2 tax returns before you want to do an exchange. So the person selling a vacation home doesn't know this because the IRS didn't send out a postcard. Right. So we try to tell people, hey, if you own vacation homes, guess what? Before you sell that vacation home for at least 2 tax returns, you need to have shown rents on that vacation home. Yeah. You need to rent to a non-relative at market rate. And you need to, of course, collect the rents and report the rents on your tax return. Well, how many days? How much time do I have to rent it? You only have to rent it for 14 days a year.
Easy.
So for each of the 2 years, 14 days. But the client is supposed to limit their use of the property, including their relatives' use of the property, to no more than 14 days per year.
Wonderful. So they want it to be a rental property.
But the tax code has a caveat in it that you can occupy any investment property any unlimited number of days per year as long as you're fixing it up. Okay. So if you are going to have other use of the property in excess of your 14 allowable days, then you better keep a journal as to what you were doing there and keep all your receipts so that you can show, yes, I really was there for maintenance.
Yeah.
You know, I had this tenant and my neighbor told me I needed to come up there, so now I had to come up. We had a bad storm, I had to come up. So those types of situations are things that people want to document.
Understood. Thank you for telling me that.
Yeah.
Okay. What else can you think of, before we wrap up and say goodbye, what else can you think of that might be good information that people should know when it comes to dealing in a 1031 exchange?
In my estimation, from a realtor standpoint, I think that it's good and incumbent upon every realtor when you take a listing of anything other than what you know is that primary that you say, you might want to do a 1031 exchange. And why are you doing that? Well, you're educating them because let's face it, the last time I went to see my tax consultant, what did I hear? You owe this. You owe this. I didn't hear all the strategies he said that I could have to help myself avoid some of this later, what I could have done better. I just heard write the check. So the same thing happens for your sellers. They forget that there's this issue. So if we could just catch them at the listing stage, that gives them time to go talk to their tax consultant, swish them off to a 1031 person so they could talk about the strategies, and then allow them the opportunity, because the worst thing that happens is I get the call 2 weeks after they've already closed. I closed on my investment property. I didn't cash the check. I still have it. The IRS says you have a taxable.
You can't even touch it.
That's right.
It has to go directly to the intermediary.
Yes. So I think that we could hopefully help more investors if we could get them right there at that listing stage.
Got it.
Get them educated. And we know that we're all busy in our lives, just like you are. So are your investors. So not only will we tell them at the listing stage, but we'll check back in. Why am I going to do that? I don't have time for that. You don't want to pass up the opportunity, because this person's going to sell one and buy one in a short period of time. These people come back every 2 to 5 years. They're a great base of clients for us to have. And
you just want to help them save money as much as possible.
It helps people. I feel so great when I get to help people. You know, it's painful because at first when they come, all they can think about is what they owe the IRS and how dare they have to pay after they've toiled and sweat with their investment property, and they're like, now I owe this. And then you refresh them that, yes, but you can now build more wealth to leave to your heirs. And it's a great way for you to give something back to both renters and to your heirs in a way of wealth for your particular estate.
There you go.
It's great.
I love it. So, Brigitte, are you okay answering questions? If somebody has a question, that's something that they're exploring?
Yes.
Okay. How can people get a hold of you?
So you can reach us on our website. We do have an informational sheet. So if you want to fill that out, you can call anytime. And my number is a 520 number, 520-465-8690. You can also reach me via email, which my email address is on our website as well. So you can get
what's your website?
And our website is the1031.com.
Perfect.
Yes, and our company really is named the 1031 Exchange Company, LLC. People often say, what company are you with? The 1031 Exchange Company. I know you do exchanges. What's the company? Yes, it's the 1031 Exchange Company.
So easy.
Yes, it is so easy.
It's good. And you want to be easily found.
We want to be easily found, and we want to be readily available.
There you go.
People are doing this on the weekends. They're doing it at night. They're they have other lives too. So we need to be readily available to pitch in there when they have that question. And that's what I pride our company on, is that we're there on the spot, ready to help them with their questions.
There you go.
We also can help them find their CPAs.
Perfect.
So if they're one of those clients that I do my own taxes, well, this time I think you shouldn't. And here's a list.
There you go.
So we can help them.
Awesome.
Yes.
Thank you so much again for coming on, Brigitte.
You.
I really appreciate it.
It's been wonderful.
It wasn't too bad, right?
No, this wasn't bad at all.
It went quick, right?
Yeah.
Good.
I thought it was going to take forever. Really, I was sitting in the lobby going, it's going to take how long? I don't know if we can take up that much time.
No, I think it was great information that you were able to share, and I do find it very valuable to people that are, even if they're not looking at doing a 1031 exchange right this minute, it's something that they can consider in the future as they continue to build their portfolios and they continue to make profits. Right. We like that word.
Keep profit. Keep profit. Exactly.
All right, guys. Thank you so much for watching the NextView podcast this week. As I mentioned in the video that I posted yesterday on our page, we have some phenomenal guests coming up in the next couple of weeks. We're going to have, it's August already. Next week we have Nikki coming on. She is a coach, and she's going to help talk about goal setting and everything that she does. And then we're going to have another Brigitte come on from the Hive Mobile Bartending. We all like to have a drink. A little bit. So anyway, Nikki's going to be coming on to talk about her business that is fairly new. I think she's been about a year in the business. So anyway, we have some great guests coming up for you guys in the upcoming week, and we're excited to introduce them to you. And so anyway, thank you guys for tuning in. We'd like to say a special thank you to our awesome business partners that help us each and every day, both collaborating with our clients and collaborating with us to help us bring the best possible service we can bring. So NextView Home Professionals, my awesome team, Fabi and Samantha and myself, we are happy to help you with your buying, your selling, your investing, and your referrals for 1031 exchanges. So make sure you give us a phone call if you have any questions. Even if you just want to bounce something off of us, you need a referral, we are always happy to answer your questions. Our phone number is 480-281-3078, and you can reach us on that number by calling or by texting, or reach our website at www.nextviewre.com. And our awesome lending partners, the Oliver Whalen team at Nova Home Loans. If you guys are considering a home purchase or you're considering a refinance, if you do not contact Ryan or Justin, you are doing yourself a disservice. So even if you just want a second opinion, give Ryan and Justin a call. I'm sure they will definitely give you the best possible advice and lead you in the great direction. One of the reasons I like working with them is because they're genuine, good people. And if they can give you the best deal, they will. If they can't, they'll tell you they can't. It's as simple as that. And we also partner with Yvonne Hunter from Platinum Home Warranty. They're one of the best home warranty companies I have ever seen, you guys. I love working with them. We've been working with them the past couple of years. If you are, perhaps you've purchased a house with us recently or maybe a year ago and your previous home warranty is up for expiration, then consider, if you're considering renewing it, consider contacting Platinum Home Warranty. Yvonne will give you all their pricing and show you all their coverages, or you can give me a phone call and I'm happy to provide you with that information and get that over to you. So, and then last but certainly not least, we work with Jeremy Eaton over at Security Title. You mentioned,
Yes.
You worked in title in the past. Jeremy is our preferred partner over at Security. We typically work with Elva Palmer in escrow. They're amazing to work with, so they're going to help you keep your investment clear and free of title at the close of escrow. So if you guys have any questions about any of the partners we work with, anything we talked about regarding 1031 exchange, please contact me, please contact Brigitte, and we'll be happy to answer any of your questions. See you next week, guys.